Traders, how are you? Marcello, founder of the Day Trading Academy, co-founder of Speed Up Trader, where you can come and trade with a funded account rather than your own account. Today we're doing the recap of the week and quarantine week. Overall today, this week, we had a bloodbath in most markets. I don't know if you guys remember, sometime last year I was talking to you about black swan events. I didn't talk about, I don't think anybody saw a pandemic occurring overall in the world, even though it has happened before with ththings like H1N1 and things like that. But I'm just here to tell you that this is just the pin that blew up the bubble. This isn't really going to end, let's say, very fast or in a great manner for you and I. So I want you guys to think about how quickly things have changed over the last week, due to the fact that I think that this is really just the beginning of what's going to happen over the next 10 years. Economic problems, social problems, climate problems like the earthquake that I talked to you about, some kind of earthquake or something in the next 2 or 3 years on the west coast of the US. But right now, if we really think about it, really the only career that you guys can do, essentially, unless they close the exchange, is trading. So think about that if you want to, learn somehow or be able to have a backup plan, because right now most of you guys have all the time in the world to be able to learn, and that is what most of us lack normally. On Monday, the U.S. stocks plunged due to the fact of the rapid spreading coronavirus. Monday also we had a situation where the Fed cut rates to 0. They also stated they were going to inject $700 billion worth of money to be able to buy treasury bonds and also mortgage-backed securities. The last time rates were this low, it was more than a decade ago during the financial crisis. And one of the things that's really interesting is they did that as a way to quote-unquote help the economy, but most of the market actually took it as panic. And so that really didn't help the market at all, and the market continued to go down. The Dow on Monday dropped 12.93%, close to 3,000 points, which is the worst day since 1987. The S&P 500 dropped 11.98%, the Nasdaq 12.32%, and the Russell went down 14.27%. Tuesday, the markets did end higher due to the fact that the legislators and policymakers talked about stimulus spending. Right now, I'm recording this on the weekend. They're talking about a $2 trillion stimulus package for the U.S. economy, which I do think is going to shorten the time where we're going to have the next crisis, right? One of the things that you guys should know is we never really solved the last crisis that we had. In 1999, there was a hedge fund that collapsed. Wall Street bailed it out. 2008, 2009, Wall Street collapsed. The governments bailed it out. And now we're at 2019, 2020. Who's going to bail out the governments, right? So that's kind of what we're walking into now, because we never really fixed the problem in the first place. Now, they did announce on Tuesday that they're going to do the stimulus package to be able to try to mitigate the economic damage due to the coronavirus. This essentially, the economy has come to a grinding halt. The first quarter, I think, will probably come out at 0.1 or 0.2% growth. The second quarter, due to the entire world economy shutting down due to the quarantines, will probably come out at a very negative number. And hopefully then in the third quarter, we get a bit of a bounce back as everything comes back to normal. Remember, I told you guys that I think this is going to last probably until April or May. I'm going to say probably May now. As the world gets warmer, the virus doesn't spread as quick, things will get back to normal. The only problem I see, if you guys remember in the early 1900s in the Spanish flu that wiped out a huge portion of the population, world population, this actually might last longer than just a year or a season. So what may actually happen is this will travel to the southern hemisphere where it's colder and then come right back next year. So hopefully by then we'll be able to have a vaccine or treatment to be able to treat the coronavirus. Other than that, on Wednesday, the markets did end lower. Dramatic action by policymakers failed to calm the markets. On Thursday, U.S. futures plunged lower again, but Thursday afternoon, I should say, they ended higher due to the fact that We had a situation where we had news about the business factories continuing to shut down, the recession fears growing, and the job losses mounting. On Friday, central banks and the governments unleashed a plethora of stimulus. The U.S. stocks ended far lower again as investors did not calm down with the news. And there was also big news out of New York. If you guys are overseas, it's one of the biggest populations in the United States, one of the biggest economies also in the United States, when the governor of the state ordered the entire workforce to be able to stay home, I should say. For the week, the Dow's down 20.92%. For the year, the Dow's down 32.81%. The S&P 500 is down 17.61%, down 28.66% for the year. And the NASDAQ is down 14.46% for the week and 23.33% for the year. In overseas market news, on Monday there was a global bloodbath as well. Australia's benchmark index crashed nearly 10%, which is the worst day on record. The Mumbai exchange in India plunged another 8%. And there was a little bit of good news. The Swiss market was one of the only markets that was positive. It went up 4.78%. I didn't get to research why, but if you guys want to know, just leave me there in the comments and I'll look it up for you guys. Istanbul went down 11.43%. And then in Latin America, the biggest loser was my very dear Colombia, went down 27.71%. In Africa and the Middle East, most markets were extremely negative as well. And last but not least, in Asia and the Far East, Philippines was the biggest loser at 21.23%. Bitcoin and other cryptocurrency news. Bitcoin was at 5,868 last Friday evening. It moved lower again on Monday to about 4,894 and some change. The weekend market loss was 19.87%. And the positive gains for the year are actually completely gone now, as investors now ponder the actual future value of the entire sector of the cryptocurrency assets. There's a hedge fund that collapsed in the cryptocurrency space called Adaptive Capital. It's a crypto hedge fund. After the markets crashed to 3,000 and change, they took heavy losses, decided to go ahead and close their doors and return the remaining assets that they had to investors, because it's going to get to 50,000. And other than that, for the week, Bitcoin went higher, 12.65% positive for the week last week. 6,168.72 was where it ended at. And what I'm going to do now, just due to the internet that I have here, I'm going to go ahead and do the rest in a podcast setting, so you guys can keep listening here on YouTube. But remember that we do have the podcast available everywhere: Spotify, iTunes. Just look it up under Day Trading Academy. All the videos that I'm going to start doing, I'm going to go ahead and throw them on the podcast as well to be able to go ahead and help. So let me know if you guys have any questions in financial and banking news. Wednesday, the number of coronavirus cases and deaths in Europe supposedly surpassed China, as a lot of analysts are saying that the numbers that come out of China actually aren't correct. So if you want to believe those numbers, then that's the case. The ECB, which is the European Central Bank, launched a $750 billion bond buying program to stop the pandemic, inducing the financial rout that occurred in the markets in Europe as well. This could, the idea behind the launch of the stimulus is to be able to recover the Eurozone's economy, to be able to ensure that it doesn't go into economic ruin. The new policy is now planning purchases of 1.1 trillion euros of purchases, which is about $1.20 billion. And the new round alone is worth about 6% of the entire European Union's bloc's GDP, the Eurozone. After the announcement of a 750 billion euro bond buying program as well, which is just about $810 billion. The Eurozone government's bonds surged as well. And if you guys remember, what I talked about was the situation where when people are scared, they always fly to safety. So when we talk about government bonds, for those of you guys that are new, we're talking about the interest rate on the government debt of these countries. And so the reason why when you hear in the news when they say the yields have dropped to a record low, that essentially means that everybody's piling their money into it. So the interest rates are going down because of the demand. The 10-year Italian bond dropped by as much as 90 basis points, or if you guys think of it in terms of interest rates, one would be one 100 would be 100 basis one. Let me start that over. I got a little bit confused there. 100 basis points would be a 1% drop in interest rate. So it dropped 90 basis points, which means 0.90% to about 1.40%. Spanish and Portuguese 10-year bond yields slid around 30 basis points each. So remember, that's about 0.30%. And the benchmark 10-year German bond yields were down about 12 basis points at 0.35% as well. U.S. Treasury yields remained at a record low on Friday as investors flee to safety due to the situation with the coronavirus and the impact that it's having right now on domestic and global economy. In commodities, oil prices for April and May plunged to the lowest level in 2016. The reason why I say April and May, if you guys are brand new here listening to the recaps that I do, is because remember that oil is a futures contract. So when you go to buy the oil, you can buy the April contract or the future contract to deliver the physical product in the future. The coronavirus pandemic wreaks havoc on fuel demand and also threatened global economic stability as the U.S. oil fell to an 18-year low on Wednesday, just above $20 a barrel. There's actually very, very, very interesting opportunities at the moment. Remember that Warren Buffett always said, be greedy when others are fearful and be fearful when others are greedy. Well, if you look at the market now, there's a lot of people that are fearful. If you guys want me to talk about that, just leave a comment there just leave a comment there on YouTube or Instagram, and I'll be happy to go ahead and talk about that as well, things that I'm looking at. On Thursday, oil gained $5 a barrel due to the fact that President Trump stated that he was going to fill the U.S. Strategic Petroleum Reserve to the brim. If you guys don't know what the SPR is, or the Strategic Petroleum Reserve, after the huge oil impact, and if I'm not mistaken, the 1980s, the U.S. government decided to have a reserve of oil so it wouldn't affect our economy if we couldn't get it, for example, from overseas. So he's going to fill that to the brim and said that he's going to buy 30 million barrels of oil, American oil. U.S. crude is down 40.21%. It went from 31.73 to 22.63. It's down 61% in 2020. And the international Brent is down 25.46%. It got down to 26.98. It's almost down 60% in 2020. Gold extended its losses after its worst week in near 4 decades. Gold went down 2.06%. Silver went down 16.54%. One of the things that I found really interesting with the silver is that you can't buy the silver eagles anymore. For those of you guys that are interested in that, they're actually sold out everywhere, or they're selling at a premium. Silver got down to $12.69. In political news, the Brazil's largest state, called Sao Paulo, shut down for 2 weeks to help fight the coronavirus, the governor stated on Saturday, while the president Bolsonaro again claimed that hysteria over the outbreak could cause more harm than the virus itself. In Bolivia, the interim government stated on Saturday that it's going to postpone the presidential elections that were scheduled for May 3rd, and now is going to institute a mandatory countrywide quarantine for 14 days as the coronavirus begins to spread across the country. In economic news, now the economic impact of the growing coronavirus outbreak in Europe and the United States is shifting service-driven industries like hotels and restaurants to the manufacturing sector, leading to a synchronized shutdown of heavy industry. Experts say this is unlike anything that we've ever seen since the 1940s. Analysts at Goldman Sachs are now expecting the U.S. growth to contract 24% in quarter two, which would mark by far the largest quarterly drop in GDP in the U.S. GDP in history. And Americans applying for first-time unemployment benefits jumped last week, increasing by 70,000 to about 281,000 people requesting that. It's the fourth biggest weekly increase on record going back to 1967. Tied to coronavirus pandemic, obviously because a lot of people are laying off since all the industries are shutting down due to the quarantine. And state-level jobless claims may hit over 2 million in next Thursday's report as the government warns of 20% of the U.S. unemployment without swift federal action. In corporate news, the Japanese automakers Toyota, Honda, and Nissan announced that U.S. factories are going to shut down in a bid to stop the coronavirus. Toyota is going to halt North American production until April 3rd, Nissan until April 6th, and Honda is going to suspend it for 6 days beginning on the 23rd of March. That is Monday for those of you guys that are listening. 8 largest U.S. banks, including Bank of America, J.P. Morgan, and Citigroup, are putting share buybacks on hold through the end of quarter 1 and all of quarter 2. And they're putting capital to use by helping consumers and businesses. And Trump stated support for Boeing after the U.S. plane maker called for a $60 billion bailout of the U.S. aerospace manufacturing industry. Airlines sought over $50 billion in airline assistance as well, even though a lot of lawmakers are wary of bailing out Boeing due to its poor decision-making of what's happened in the market to the company this year and last year as well. In trade news, the U.S. trade is going to decline by almost $1 trillion in 2019 if it falls at the same rate if it did in 2009. And the global economy is reeling. Remember, in 2009, the global economy reeled when the crisis originated in the U.S. mortgage market. The coronavirus pandemic is the third major jolt to the global economy in the first 2 decades of this century. While it seems to be the most damaging at the moment, it's certainly way too early to know what the full impact of trade is going to be. But remember what I told you guys before as well, that I think the next 10 years we're going to have a situation like this repeatedly. We're going to have a lot of economic problems. We're going to have social unrest and also a lot of climatic problems as well, volcanoes, earthquakes, hurricanes, things like that. In investment news, Trump signed a $100 billion coronavirus relief bill, and Congress provided the economic stimulus fiscal package of more than $1 trillion. It's going to include cash for Americans. As of today that I'm recording this, they're actually talking about a $2 trillion package now. Treasury Secretary Mnuchin also says that corporations are going to be able to defer tax payments of up to $10 million, while individuals may defer payments of up to $1 million to the IRS. And economists in Morgan Stanley and Goldman Sachs are now seeing that the COVID-19 push global economy is going to push it into a global recession. It won't be as steep as the 0.8% contraction in 2009, according to the IMF's measure, the International Monetary Fund, but will be worse than 2001 and the early 1990s recession. And last but not least, in international events, Argentina, which has a population of just over 45 million people, was ordered by their president Alberto Fernandez to stay in their homes with limited exceptions as part of the country's push to stop the spread of the coronavirus. This was explained in a TV address in the capital of Buenos Aires. If you guys didn't know, their presidential palace is called the Pink House instead of the White House in the U.S. And emergency measures are going to remain in force until the end of the month. And also in Italy, which is one of the most hardest hit places in the world, their death toll has risen by 793 to close to 5,000 deaths, with about 53,000 infected. They supposedly passed China with the number of affected. If you want to listen to the numbers actually coming out of China, which a lot of analysts are saying are not correct, and the number of dead is surpassing 5,000 in Europe, with Italy, Spain, and Germany reporting a steep rise in infections. The worldwide deaths surged past 11,000, with more than 277,000 people infected, while some 88,000 have recovered. That's the news for this week, guys. Let me know if you guys have any questions. Don't forget to subscribe. All the questions with the hashtag AskMarcello, and we'll see you next week.